Let's take this conversation forward. Siddhartha Khemka, Head of Retail Research at Motilal Oswal Financial Services, is with us. Siddhartha, good morning. We do want to talk about the overall market outlook with you, but have to start with IT, right? That's where the news is. That's where the price action also is. What have you made of things so far? We've heard from, I think, around, five companies, including the two mid-caps now. What's your stance on the sector, and what stocks are you recommending a buy on, if any?
Yes, very good morning. So I think I was hearing the discussion that you guys were having, and including the detailed discussion by Rima. There have been various segments, and each kind of showing different kind of growth as well as outlook. And rightly so, the views have changed for all the companies in terms of the segments that they are present in. If you look at clearly, TCS was marginally in line with expectations, not that a weak outlook, but Infosys clearly missed the trend, and even the outlook given by Infosys was very weak than expected, and that kind of you can say hit the sentiments very hard. But finally, there was some glimmer of hope with the mid-cap IT names like Mastech, Cyient now coming out with very strong numbers, and HCL Tech having a mixed number. I would say that not very disappointing, a decent set of numbers, and its defensive portfolio that it is helping it to navigate in the current challenging macro environment. Clearly, if you look at Cyient, we are liking it in terms of very strong numbers that they have announced, clearly leading from the front in terms of the growth, in terms of margins, and in terms of the outlook also. If you look at the growth outlook, we believe that it would consistently show strong growth for next year as well. If I were to look at it for the Q4, Cyient reported strong numbers with revenue growth of 39% YoY in constant currency basis. And the key segment that delivered growth was the consolidated services business. We are believing that Cyient on overall basis is shaping up quite well with positive momentum in most of its growth engines. And to top it all, valuations are still comfortable for Cyient at almost, you can say, a 1 year forward FY24 P of 14 times, which looks quite attractive. And that gives us more comfort in the strength that Cyient could continue to do well. So we have a target price of about 1360 from a 1 year basis, and we continue to remain positive on Cyient.
Siddharth, your pecking order between Infi, TCS and HCL Tech now, how would you rank them in terms of upside potential from here?
So yeah, clearly if you look at post the results, we believe that while we were preferring something like an Infi as our top pick, but I think after the results, we are looking a bit subdued performance from Infosys. TCS is, as I said, given an inline performance, but in terms of pecking order, I would say HCL Tech would be preferred because of its defensive portfolio, followed by TCS and then Infosys.
Okay, got that. Siddharth, thanks for joining us. I also want to ask you about some other stocks. I know that you like Lemon Tree, so take us through the call there. What is the kind of upside that you see, and anything else that you like from the hotel space?
Yeah, so I think the hotel sector has been quite resilient in this entire environment. The sector continues to do well. It is likely to expect one of its best fiscal on back of the improving economy, growing travel, both leisure as well as business travel. The sector is witnessing very strong ARRs, which are likely to improve 10 to 15% this year, already on back of a high base. And if you look at the occupancy, that is being sustained at a higher level, 68, 70, 75% is the average occupancy that the sector is witnessing. So if you look at specifically Lemon Tree, there are some of these other smaller hotel companies which came out with results, which have come out with record earnings for Royal Orchid and some of the other companies. But if you look at Lemon Tree, we expect the earnings momentum to continue on back of occupancy, resilient demand, especially given that it caters a lot to the business travel segment. It is looking at aggressive expansion plans, so plans to add 35 hotels, 2,000 rooms over the next 1-2 years. So we are looking at a consistent growth in revenue of about 27%, PAT growth of about 36% over the next 2 years, and more importantly, ROEs, which we have seen that consistently in hotels are low single digit. For Lemon Tree, it is likely to improve to 21% by FY25. So overall, we have a buy view, a strong upside of almost 115 rupees target from a 1-year perspective. We also like Indian Hotels, which is doing well, which is a market leader. But I think in this environment where both will do well, Indian Hotels, the results is also expected to be pretty strong.
Got that, Siddhartha. Lemon Tree, of course, has done well in the recent past. Thank you for joining in today. You have a good weekend and appreciate you taking out the time to be with us. We'll take a quick